Good afternoon, traders. This is a live trade recap. I took one trade this morning at the market open. I got stopped out of that trade. So why did I stop trading? Because my plan says I could take up to 3 trades per day. The reason why is because of what happened on the chart, and because my plan also says that if that first trade fails and the price goes down below point A of the ABCD pattern, I'll show you this in the video, that the trade has failed. I can't take any more entries. Therefore, I must stop trading, because I know, based on my statistics that I've collected so far, my own, that my second and third trade are much more likely to work out than my first trade. But if the ABCD pattern fails, I can't take a second or third trade. So it's pretty cut and dry. And that kind of discipline and that kind of plan is going to keep me from taking large losses in the future, and also going to keep me profitable as we are so far in this plan after 70 trades. So let's take a look first at the screener. I like to show you guys how I pick my stock. So I go to my mid cap screener here. You can see that I've adjusted the price to $50 max, because after analyzing some data yesterday, I found out that only 17% of my trades were over $50. So there's really no reason to include stocks that are in that $50 to $100 range, because they just don't trigger entries often enough. So let's click these 3 dots, click modify. That applies those filters. So here you can see $5 to $50, and if I organize it by price, you'll see that the top price is $50 and the bottom price, I don't know why this shows 0. Oh, because this is an IPO, so I guess it's there because they don't know what the price is going to be when this thing is released, and it falls in the mid-cap market range that I have set up here. So that's why that's there. But you can see all of the stocks that are actually trading, the lowest prices are around $5. So let's organize it by volume. That's how I use it at the market open. It's much later now, so it's going to look different. But Macy's wasn't number 1. It was probably number 2 or 3. It was one of the only ones that was above 2% in the percent change. It was probably around 3 or 4%. You could see that it's down now a little bit since then. And that was it. All these other stocks, for the most part, weren't here. There was like VIPS and TME, but both of those were below the 200 on the daily chart. You'll see that in the video. There's also something interesting going on over here I'm going to make a separate video about, so check that out. That'll be released on Saturday, about my swing trade. So, okay, so here's Macy's. Let's see, what was up here before? There's VIPS, and you can see that it's trading below the 200 MA on the daily chart, so there's absolutely no reason for me to look at that, because that means that it's in an overall downtrend, and I don't want to trade against the trend, because that decreases the probability of these 2R trades working out. So here's Macy's. I'm marking out the previous day high. This is the daily chart. Obviously, it's trading above the 200 MA. And now it needs to break that level. I'm just getting more precise here, 22.19. So it takes me a second to get it in the proper position. There's 22.19 now. So my plan says that I can only take a trade once the price has broken the previous day's or session high. Once that happens, then I wait for a pullback, and I take the first entry, which is when a 1-minute candle makes a new high after that pullback. So you're going to see it happen right here, and I actually looked away from the screen for like a split second, and I missed the entry, but I already had my fingers on the hotkeys. So as soon as I looked back over and saw that I was triggered, I just executed the trade, thinking that I'm only going to get a few cents slippage, and it doesn't really matter because it's a good setup, and they usually work out. If they're going to work out, they work out with a few cents slippage, no problem. They generally go much higher than wherever my profit target would be with slippage. That's when they work out. So we'll see what happens here. So let's get right to where, okay, so I'm going to back it up a little bit, and you can see how quickly I got triggered. There's the trigger, and then I finally realized what happened, because I was, as I said, looking away from the screen. I think that was about maybe a second and a half between the trigger and then my entry, and that little quick delay, there we go, there's the entry, cost me about, let's see, 8 cents of slippage. But again, usually that's not a big deal. If the setup is strong, it's going to hit the target, and it's going to go beyond where the ideal entry target would have been. So I generally don't worry about that. Obviously, if I missed it by a whole lot, like if, maybe a candle or two later, or if I'm a candle or two late on my entry, then obviously I'm not going to take the trade. I'll wait for a pullback to that price. But being that it was like a moment of, okay, I looked away. As soon as I looked back, I'm triggered, and my hands were already on the hotkeys even before I looked away. My instinct just kicked in, and okay, I'm triggered. Enter the trade. Now, once that happens, I just have to live with that, and I have to put my stop loss in the appropriate place, and then I base my 2-hour profit target off of that. But this is really important. When that happens, I mark out where my ideal entry profit target would be, and then if the trade went there, if the stock went to that price without hitting my profit target, and then say stopped me out later, then that would be the end of my trading day as well, because that means that the stock went to 2R without me, and I just missed the ideal entry. So, and again, that's just, I think, a good habit to be in. I'll talk about that in another video, what's going on with SPXL, but it's a good habit to be in with day trading, because if, let's say, the stock did hit this profit target, but didn't hit mine because I didn't get the ideal entry, how do you think I would feel about that? I'd probably feel frustrated, maybe upset with myself that I didn't nail that entry or whatever. And then I'm more likely to break my plan. That puts me in a vulnerable position. I'm more likely to break my plan, take a bad trade, and just make things worse. So there's absolutely no reason to get caught up into that. This is the trade I took. I have to live with what happened with it, and I just let it play out. And if my criteria to take another trade is not met, then I don't trade. That's as simple as that. So let's just keep going here and see what happens. So it looked promising there for a while. It was ramping up nicely. Then it pulls back, oddly enough, against what the market was doing. You could see the SPY, that's the S&P 500 ETF, going straight up here, and the NASDAQ as well, and Macy's is going the opposite direction. So, I don't ever take trades based on what's going on these ETFs, but it's just interesting to see how things coincide or don't sometimes. That's all. I trade everything based off of the chart that I'm trading. That's all that I look at. Okay, so now here's where I get stopped out. So now at this point, my plan says I have to look for the next entry on this ticker symbol, which would be when a 1-minute candle makes a new high, unless the price comes all the way down and breaks the point A of the ABCD pattern. And I'll show you where I marked that out. You'll see that in just a second. So there it is right there. This red line, the horizontal line, that's point A of the ABCD pattern, because you could see here, there's the bottom right there on this candle, and the stock just went straight up from that point. It gave this little pullback here. That was my entry, and that's my normal entry to take, and just did not hit the profit target after that pullback. And now it's pulling back much harder, and then it comes all the way back down beyond a 100% retracement and breaks this level. If it would have come down even to 2165 and bounced off of that area, then I could enter in for the first 1-minute candle to make a new high. But as soon as it breaks this level, my plan says the ABCD pattern has failed and the stock is weak, and the likelihood of getting a 2-hour trade after that is low. Plus, the setup is no longer my setup. If I took a trade after point A has been broken, obviously I'm not trading the ABCD pattern. I'd be trading some type of a reversal trade, and that is not what my plan says to do. My plan says I can only take this one setup, and I think that is also key. If you're a newer trader, meaning that you've only been trading for a year or 2 years or 3 years, you're still a new trader, you really should only be trading one pattern, one setup, until you've proven yourself profitable. And then at that point, you're probably going to want to stick with that pattern because it's profitable. Why would you change it? You're going to be so much better trader if you learn how to trade one pattern perfectly than if you try to trade 2, 3, 4 patterns. You're going to just be doing too many random things. Your data is not going to be meaningful. Whatever your win rate is not really a realistic win rate because it's including multiple setups. So you don't really know how often this one setup really works. And I doubt that you're going to collect, 100 trades worth of data on each setup, let alone 100 trades with whatever plan you're doing. So all of the data is meaningless unless you take 100 trades doing the exact same thing over and over again. So now I'm not going to show you the spreadsheet in this video because I'm going to make a video that I'm going to release on Sunday showing you the results so far and all that kind of stuff, and maybe I'll talk about the plan a little bit. So nothing changed with the plan today. There were some changes yesterday, and I put those into effect today. So everything went really well today, even though we took that -1R loss. The plan kept us from further losses. I don't really care if a reversal trade would have worked on Macy's. I'm not going back and looking at the chart. Whether it did or not has no effect on me. It doesn't change anything about what I'm doing. And if let's say I went back and found out, oh, the next entry went to 2R, what would that do? That would make me frustrated, emotional, and then more likely to break my plan in the future, because I might say, well, you know what, that one time on Macy's, the reversal trade worked, so let me just go ahead and take that and try to make my money back. Now I've broken my plan. My plan does not say that I can take reversal trades. So that's it. So let me just show you, I'll show you what the loss was today on Macy's. Not a big deal at all. We're only trading with one single share, 41 cents. So that's pretty much nothing. All right, so hopefully this video was helpful to you. If it was, hit the like button. If you haven't done so already, hit subscribe. If you have any questions, leave them in the comment section below. I'll be happy to get back to you. As always, go into every single trade with a plan. Stick to that plan no matter what. You're going to feel really good that you did, even if it was a red day. I'm very happy with my trading today. Today was a good day, even though it was a red day. You can even have green days that are bad trade days, where they're green because you've broken your plan. I'm going to even talk about that a little bit this weekend on my plan update and how the results of this plan are going so far. So always stick to the plan no matter what. Always take your stop losses, honor your profit target, and in the long run, you should be green. Take care.